Good morning and good afternoon to the folks listening on the webcast. I'm going to go ahead and get started now as folks are still coming into the room, and if we have to backtrack, we're happy to do that. Folks may not know me in the room. My name is Brian Balberney. I am the founder and chief executive officer of Issuer Direct Corporation. I'm going to spend about 20 minutes today talking to you about the business, who we are, how we generate revenues, the types of customers we have, the market that we're serving, and maybe where we're headed strategically, so you have an understanding to what the business is. But I think it's important to really stop and think about the purpose of the business and really where we're at and what we're doing. And so our vision is to reinvent how brands share, tell, and inspire their audiences. And what that really means is we want to be the disseminator of information and the conduit of data for our customers and the markets. So I'm going to give you a few examples before I go into the presentation today. I, as a public company, need to produce quarterly earnings. I need to communicate with my shareholders, have information on my website, distribute certificates, distribute annual meeting material, and be sure that I'm in compliance and governance throughout all the markets that I serve. Issuer Direct built platforms and technologies backed up by a service delivery team that does essentially just that. So we take a quarterly earnings call, we turn it into an event. That event is a webcast and teleconference presentation. It is a transcript. It is distribution of materials to shareholders. It is the email alerts. It is the press release that goes out to tell everybody that the quarterly call is happening. And then all the analytics and the data that back it up at the end. And so as much as what I just explained to you is the value for the issuer or the company, meaning the webcast, the press release, and all the things that go along with it, the real value for us becomes the analytics and engagement. As we go through the story today, I'll tell you the reasons why that is. We have about 10,000 customers, and about 4,000 of them are private or public companies. The rest are private. And so we'll talk about our customer segmentation a little bit so that you see where the growth opportunities go. I don't need to read the forward-looking statements. Should probably try to get that down to like 10 seconds. If I could read it, Shelley, that would be impressive, right in the 10-second mark. Even though we're here in Vancouver doing this, we are traded on the New York Stock Exchange American under the symbol ISDR. For the folks that want to go look us up as we're talking today. I think what you're going to find is a lot of unique parts of the story here, not only the business and the opportunity, but also how we run a public company. You'll meet really good companies today that have 10, 20, 30, 50, 300, 500 million shares issued outstanding. We have one class of stock, common shares, less than 4 million. As you see on the screen, it's 3.7 million shares issued and outstanding total. Heavy insider ownership, 26%. Board members, officers, directors, and employees alike own that combined 26.5% is what it looks like. And there's about 137 of us now globally. And we'll talk a little bit about employees and what we're doing and who does what and where the growth is. Covering about 23 different countries is where our customers are located, which I think is a unique thing for a company our size. Good, better, and different. Maybe I'm bad at this sometimes, but generally I like to think I'm pretty good at it, but I couldn't do what I do without the folks on the screen, and they're backed up by another 130 that are really good folks, including the guys and gals doing the check-ins for the one-on-one desk today that are supporting the crew of the crafts and everything else that we're doing here. Technology is driven by us. The webcast is driven by us. We are their back office, and we're symbiotic in that relationship. But our management team are folks that have a good amount of experience either in the business or in a related business for a significant amount of time. For example, Bernadette Lee, our VP of Distribution, has about 30 years experience. She built the entire distribution network for a firm called MarketWire. It was one of the Canadian largest news wires that got bought by Globe. So she comes from that industry. Preston and James have been with me since the start, pretty much 16 plus years at the company. So they've got a good amount of understanding what a public company needs, does, and the rest of them have been filled in as we've continued to grow the business with big corp services. Mark, our CTO, comes from GM. On-store unit, Tim, came from the payment space and payment data and other large companies that were in the payment space and Fiserv and things of that nature. So they've got a lot of enterprise experience. As we talked about reinventing brands and telling their story, it's all done from a technology play. We'll talk a little bit about AI and what we're doing there and how we're accomplishing that and really what it is that we're doing with our IR platforms, our PR platforms, and why we've got all these brands that you're going to learn about today that you wonder maybe why we have some of the brands that we've got. One of the unique things that you'll learn about us as a brand, Issuer Direct is the public company. Think of us as the holding entity. Our main brands that we go to market are ACCESSWIRE and NYSE, both .com variants of the domain properties. If you think about public company news, it's ACCESSWIRE. Think about private company news, it's newswire.com. And that's where the bulk of our customers. We generate about 375 to 400 new customers in our platforms every single month. 95% of them come from our news platform. So the good thing for us is the entry point of news is a low dollar subscription product that turns into a high dollar subscription over a period of time that we'll talk about in a couple more slides of what the total addressable market is, what the average spend per customer is, and where we're headed from a subscription business and what we do to round it out with everything else that we offer. So what is it that we do sell, right? And so we split our business into two parts, communications and compliance. And so I'm going to hit maybe the easier part on the right hand of the screen here is our compliance business. This is actually where we started. So a little history on Issuer Direct. It started in 2006 as a regulatory compliance company. We were the compliance guys and gals that figured out how to take old, boring SEC filings and CDR filings and make them digital and submit them electronically to the regulatory bodies with a fancy bit of software in the cloud. And if all of you have a little bit of SaaS experience and tech experience, in 2006, nobody trusted the cloud. Nobody wanted to put their financial data in the cloud, so we were a little ahead of the market. But the antidote really is, and the accolade is, we were the first technology software with the SEC to file an electronic submission with cloud-based software. We were the first to do it for the risk return mutual fund markets. We were the first to do it for XBRL, which is an extensive reporting language that the SEC required about 8 years ago. So we have a lot of accolades there. And so unfortunately, sometimes being first to market's good, but generally most people go first to market underfunded and get slaughtered. That's the reality. We led the market and showed what it could be done, and many companies surpassed us, but our vision never was to be a regulatory company. Our vision was to be an entire back office for a public or private company, and the private one thinking about going public and what we could do to offer them. So in our original business plan, all the services that we have today that we either own or acquired or built on our own was in our original business model from 2005 when we started the business at the beginning of 2006. So on the disclosure side, if you think about anything that touches a regulatory body, an exchange or a shareholder, votes, shares, filings to the commissions, that is our compliance business. Compliance businesses are really driven very cyclical and seasonal. And so if you think about 80% of public companies have a 12/31 fiscal year end, that means that they need to do their annual report, their first quarter report, and their annual meeting within the first 6 months of the year. So you tend to see 2/3 of the revenue in the first 6 months of the year than you do in the back half of the year. So you see, we'll talk about our Q2 results, why we had some spikes on that seasonal basis and how that happens. And that ebb and flows throughout the business. But that core business is strong. We service hundreds and hundreds of customers on our stock transfer side paying dividends. We're probably one of the largest transfer agents in the US in the Southeast for community banks. We've had a really good business model there for years. Community banks, as you know, love to buy and sell each other all the time, so that business kind of flows with it. Anything printed material, not that we want to be a printer, but if it's printed, we deliver it to our shareholders or our customer shareholders and then collect the votes back. And so that makes up what our compliance business is. In Q1, it accounted for about 30% of our revenue, or about $5.8 million. Conversely, our compliance business is really where the growth is for our business. It's led by our newswire distribution under the both brands ACCESSWIRE and Newswire. Accounts for about 70% of the revenue in our communications sector, about $12.5 million. Almost 10 million of that is news. A little over 10 million, about 10.5 million is news business alone. That news business has doubled in customers, doubled in revenue in the last 12 months, both on an organic basis and an inorganic basis in combination. And we'll talk about that transaction in a little bit. I touched on it briefly, event technologies, right? The webcast, there's, all you in the room today, and there's 3 or 4 times as much remote via our webcast technologies that we're driving for some of that. Investor relations websites, you guys know them, right? You go to public company website, you get investor relations, all the information there. We populate that for about 500 North American issuers, many of which are traded here at TSX and CSE as well. And then for companies that are both public and private newsrooms, you have to have a place to go to get their news, right? You want to sign up for alerts, download things, get subscriptions, hit social feeds. We produce all that for our customers. And then what is coming here in the back half of this year is the media database pitching and monitoring products driven by our AI technologies. And so what we've been able to do in the past 90 days is release an AI product to our customers that helps them write a press release. And for all of you that have written press releases before, if you have experience doing it, it's easy. right? If you're a good writer, you understand the business, you understand the audience, you can write a full-page press release in about an hour. And absent of copy editing and a little bit of approval compliance-wise, it's done. But I would tell you that 90% of public companies don't operate that way. And about half of the public companies in the market don't have budget for an internal PR person to do the work. So it's left to the executives, sometimes the financial people, which are probably not the best people to be writing to reach an audience. They're good with numbers, right? And I can do both, but it's tough. So an AI product really helps get them going. You put some thoughts into our AI engine, we call it Amy, and Amy will spit out a press release based on your industry sector and your past releases using your words. And then you get an ability to tighten it up and clean it up, or you could take your pre-drafted content and ask Amy to improve a paragraph, a sentence, a paragraph, or the entire thing, and she'll do it in about 10 seconds. That AI product has been given to our customers for free, and we've extended it now into our pitching solutions, our database solutions, and our monitoring products. So what that will do then is improve your pitch if you're trying to send out your press release about a new product announcement to an investor compared to a vendor, compared to a customer. Those are very different things. And so Amy understands each one of those constituent bases and how to write that pitch to be able to get the maximum effort for it. So that product is being pushed through our entire ecosystem. The hope for that is that we get the analytic back over the next 6 to 12 months. And what that will enable us to do is we go to market with other customers in each industry. We can then say our AI products have a history of understanding engagement. And what that engagement will do is we'll say to you, in this particular industry, we know the competing core, your peers, and we know the language they used, and we know the types of vernacular that was being said, acronyms, whatever it would be, and we can help you improve your engagement. So we can drive value to what that is. That's the underlying value, and that's where the license opportunity comes for, and an AI product for us next year. I know I'll be wrapped up in what is a monitoring thing, and a few people I know, I recognize faces in the room that have maybe heard me talk about this. It's been nothing about AI, big data thinking for us for years. We really have just been gathering everything. We've got terabytes of information, right? From how many times I've shown up and done this, and how many people are in the rooms, how many people listened to the webcast and asked for the transcript that showed up for a one-on-one that actually are a shareholder, or clicked on a press release and registered for something and get an alert, and what all the engagement profile is of that user. So those are things that we care about. It's defendability to us and for our customers. And candidly, that's where all the growth is. If you go out the next 12 to 18 months, 85% of the business will be driven from our communications products. That's led by our press release products and our subscription services. That doesn't make compliance not valuable, right? And somebody in the room here, DJ, will know because he focuses on this. But I will message to the shareholder that I have every quarter that this business on the compliance side will go down every quarter, single digit. And so I'm like a little superstitious on only two things in life. That's one, because every time I've been saying it, the business actually grown. So I'm going to keep telling you that it's going to go down single digits, and we'll see that business ebb and flow. But that's been a good kind of joke for us in some ways. Of the 4,500 shareholders we have, I'm going to be fair with you that the total addressable market size for us in revenue is about $5.5 billion. And that is led by news distribution, about 900 million, and then the underlying products of media database analytics and pitching. That's where all of it comes from. So for the past 2 years, I've been telling people that all that matters for us is customer growth and a percentage of the news market. We need to control more and more percentages of the news flow in North America in order to have enough seats at the table to be able to sell them these other solutions. You sell them the other solutions, the average revenue per user will grow, and the rest of this takes care of itself. So a lot of data on the screen, right? Our early 2024 KPI metric was to get to 10% of market by the end of 2024. We've already reached that, right? We're at 10%, little over 10.4%, our brands, Newswire and ACCESSWIRE, both. This is volume-based, not revenue-based, okay? And I'll explain to you what the differences are. So we believe we can get to 15% by the first half of next year. We are on that growth rate that we're hitting 8 to 15% each different quarter, depending on the quarter and the time of year, in our growth of our news business. We're doing it in several different ways compared to the industry, and we'll talk a little bit about some of these peers or competitors, being polite when I say peers, right? We go to war with them all the time. Cision, PRN, PR Newswire, you know the brand. Here in Canada, for the folks that are reading news daily, likely comes out of a brand called newswire.ca. That is the PR Newswire brand here in Canada. Globe Newswire is owned by another firm called Notified, and some formatting issue there, but they're about the same, right? About a third of the market each, and they change back and forth quarter after quarter. The bigger differences between the three incumbents, they've been around forever. The difference between them and us is very significant, and people don't really realize that, right? And so we're building brand awareness that now PR agencies and IR firms, direct customers, and the community at large, meaning distribution partners, want our content equally, just like they do the other three. Tech innovation is very important. If you were to try to sign up for an account at businesswire.com today or any of the other brands, you couldn't do it. With ACCESSWIRE Newswire, you can do it today. You don't need to talk to me or my team, right? If you really know what you need to do, you can go do it. So we've kind of taken a very traditional business model and flipped it into an e-commerce play. And that's one of the reasons why we bought a brand called newswire.com, because Newswire gave us the ability to really have control of that news market by the tens of thousands of customers driving into what we spend about $450,000 a quarter in pay-per-click and digital advertising, right, to drive those customers to that market. So long-winded short, I'm going to go quick because I've actually gone long here a little bit, is that we guided to get to 10% by next year. We're already there. We're going to get to 15% by the end of the first half of next year, which puts us into a big threat. The prior presentation, there was somebody in the back of the room that said something about how big brands typically don't incubate, right? And so they let people incubate and disrupt the market, and then they get mad, and then you turn around and they go buy them. That's the nature of what it is, and they pay crazy premiums. In our business, it's the very same way, but it's not incubation, it's disruption, right? And because these incumbents are beholden to old technologies and old ways and old pricing models, they can't change. So groups like us are coming around and changing the way the market works. And so at some point, that 10% today goes to 15 or 20, and we're a pain to somebody. And to be fair, each one of the three of these larger news brands are owned collectively by PE firms that all of them in total have about $40 billion in the market and companies they own. So they've got the capital to buy something else at some point if we start to chew away more and more of their market share. Go back and look at our financials. I encourage you to do it for folks that don't know the story very well, because you can't possibly learn everything in 30 minutes. I'd love to do one-on-ones with you guys to talk about this. We had talked about Q2 showing the full realized savings and our cost savings for the combination of the merger we did, or acquisition we did in November of last year. That showed through 31% adjusted EBITDA, a little over $3 million for the quarter. Puts us on a track to be over $9 million for the year. On an adjusted EBITDA basis, which is far ahead of analyst guidance and what he said. Total revenues about 9.6, 66% increase from prior year that you guys see, primarily driven by news, right? News is the driver for our business today. Everything else is growing at 2 to 6%. News business is growing in the high teens, and on a consolidated basis gets us to low teens growth. And to be fair, low teens growth business in a CAGR industry that's growing about 4%. Right, so we're outpacing by 4 times in that model. Real quickly on subscriptions, over about 1,000 current subscribers of our customers today. We have a lot of people buying one's product, not the full suite. These are people buying full suite products from us. Taking it from a little under 500 or $6,000 average spend up to a little over 8,500 and doubled the customers in the subscription basis. We'll get that number to 12,000 and beyond by these additional products that we talked about, the media database, analytics, and monitoring. I want to make this a leave behind slide, but the reality at the end of the day is a company that's generating adjusted and free cash at a little over $9 million a year with less than 4 million shares issued outstanding. If you comp us against the transactions that have happened in this business, that would make the business 12 to 16 times EBITDA, 4 to 5 times annual customer growth or total revenues. That makes the market cap of the business about 135 million US. It's traded today about 80 million US. To be fair, love to work through the spreadsheet with you on a comp basis, looking at Innodata Q4 and EQS. The majority of these companies don't generate cash. They have low gross margins, no EBITDA margins, and the rest is history there. And just as a side to this, I think we're at quarter 42 of consecutive cash flow from operations, just to give you an idea of how we tend to run the business. Sorry that I had to flip through that because she had a slide that came up that said 3 minutes. And so I'm sure there may be a question or two about capital allocation or dividends or something else that somebody may ask. So I'm happy to answer those. Yes.
I notice on a daily basis, volume is relatively low.
It is.
I think if you could address that and explain what that means.
Yeah, look, I don't ever know what the share price is unless somebody tells me something happened drastically. We are a fundamental focused business. We focus on the business, let the share price take care of itself. And so what that means is not only do we have shareholders, we have fans of the business. And 26% inside held, we have another 42% held by 7 different groups that are long focused. So that makes up the majority of the float plus the outside. So it leaves basically about 18% of the company that can be freely tradable. And the freely tradable shares typically trade about 5,000 to 7,000 shares a day. So it's a patient buy, right? Any significant volume coming into the stock at 22, 23, whatever it is today would increase the share price significantly, very short order. So people tend to be very patient, picking away and holding over a period of time. And I'm happy to actually, excluding their names, show you the buying patterns of our current shareholders and what they've been buying over a period of years. And you can go look at their Schedule 13s. Nobody's selling. They're all continuing to buy or holding what they have. For us, we've got to address that at some point, right? We're a microcap company that has less than 4 million shares issued and outstanding. So we've got some ideas on what we may be able to do at some point in the future. But right now, it's about fundamentals and growth for the business. Thank you. Good question. Yes, sir.
So market share for your news business. I'm assuming that is like North American. Are you able to break down what your presence looks like in Canada here?
We are. We can do it by Canada. We can do it by province, by state. We can do it by industry. I would tell you that real quick, and I know we're going to run out of time, is that we were buying this data from the market, right? So we distribute our news to thousands of distribution points, and so do the rest of our competitors. So we were back buying the data feeds from them, trying to get the data. And in fact, the information they were giving us was wrong. So we actually have a team of analysts that do this every day. We are gathering all the RSS feeds from every news wire in North America, ingesting them into our database and counting it and segmenting them by topic, by industry, by province, and by state as needed. I don't have that data with me today, but I'm happy to follow up with you and get it. We've got about 575 Canadian public companies that use our news product today. So we're likely accounting for about 8 to 12% of the Canadian market. We're probably higher here than we are in the US, just due to the number of public companies in the US.
Okay, thank you.
Thank you.
There's time for one more.
Yes.
Can you just go into capture analytics?
Yes.
I think that's
it is. The analytic engine we built years ago really is based on a machine ID, not a person. So I don't want to scare you, right? Because we all get then worried about my personal data. We actually don't care about you as the person. We care much about the attributes of that machine ID. And so the question really is about what we are going to do with that data and how we're going to leverage it to benefit our customer. And it's never about marketing. So we're never going to collect data, then sell it to our customers to market you, because it's defeatist. We're not in the ad business game or marketing game, but we're in the business of trending and understanding what the trends look like. And so if we can say to customers, in the future, you should be buying these 2 products along with those 3 products, because everybody in your industry does that with us, and they end up with 30% more engagement, and their shareholders last longer on their conference calls. They answer more questions, they click more links, and they subscribe to more. Those are the patterns we're looking for, right? Because then we have a differentiation to the market far beyond what we have today, and that is brand sticky to them, right? And so we do this today in a product called PR Optimizer. We actually write content for our customers and distribute it to their constituents, and we gather all the analytic from them. And we generate about $700,000 in revenue now on that, and growing. We've already sold a bunch of new customers, and this quarter alone that we'll talk about on our next call, that are actually just based on that analytic engine and AI. It's not based on anything else. And we're starting to drive good amounts of revenue in a short period of time this year with that. And we think that that could become a leader as part of a decision-making process when you're picking a PR company or a webcast company or whatever else you need that Issuer Direct may have for you. Thank you. I think that's about it, right? She's standing telling me that's all. Thank you, everybody.